Hey, what's up, guys? It's your boy Toxic. Let's do our market forecasting. So, as you can see, I've already done my market forecasting for the week, but because I need to show up to make sure I do videos for you guys, so we need to start all over from the beginning to see what the week holds for us. As you can see, it's a new week. The market will soon be opening, and we need to understand. We need to start by understanding what happened on Friday after the news event that happened on Friday. So after the news, where is price coming from? Where will price be going to in the week? So quickly we bash to our 1 month time frame. We always stick to our top down analysis as usual. Always stick to the top down analysis. So without wasting much of your time, I will just take all of these things on my screen and we're gonna start. So this is DXY guide. DXY, the dollar index. So in Forex, I will start by advising you, if you're a beginner trader or an advanced trader that is struggling to be profitable, I'll start by advising you to stick to 2 or 3 currency pairs that you understand. Don't trade multiple currency pairs because trading multiple currency pairs brings you a lot of confusion. So for me personally, I trade just the EU, GU, and gold. So let's step down to it and let's see what the market hold on us. So looking at the higher perspective on the DXY, you can see we are being bullish all this while, but from the beginning of this year, we have been bearish. So as you can see from January to now, price has been going down, down, down to the downside. So let us start by understanding where our swing points are. So basically, we will mark our swing highs, which is this high here. We have the swing high here, and we have the swing low all the way down here. Okay, so marking your swing highs and your swing low is actually giving you where the market came from and where the market is heading to. So any reaction within your swing high and your swing low now is what the market is taking out the internal range liquidities, where internal range liquidities was being built in the market. So as you can see, we are being focused just at this area of price here, this area of price. So if you look technically, we start by understanding when the market came all the way up here, the market came all the way to a supply zone to take out liquidity in this supply zone. So we never had a new higher high, but instead we had a sweep of liquidity in that supply and the market pushed all to the downside, giving us this break of structure. So as you can see, we have our BOS here, which is a break of structure. So boom, after I had this break of structure at that level, now the market is telling us the market is pushing more to the downside. And where technically can you actually see the market going to? Systematically, the market is heading down to our candle range low, which is that's where our next draw on liquidity is sleeping. But then we need to start by understanding some certain confluences in the market. So what we are interested in is what happened last month and this month. So if you look technically, this month is not yet over, but when you look technically, you see last month we had a bullish candlestick. Last month was bullish. You can see last month was bullish. That's the bullish candlestick of last month. So last month we were bullish, and now we need to see what we will be having this month. So now we standing, if last month was being bullish, we need to start by marking, maybe we start by marking our highs, last month high and low, what happened last month. Oh, so we have something like this. So when you mark your last month highs and last month low, that's the candle range theory. You want to see what happened last month and what is happening this month. So what are we supposed to be looking at right now? We head straight to our weekly time frame. So our weekly time frame, now you understand what happened the whole of last month and what is happening this month. So when you look at what happened last month, then you get to understand some confluences in the market. So last month we had this move. So when you look in between this range of your last month high and this month, you understand that everything that has been happening here, it's the price action that has been happening last month and this month. So last month we had this range all the way to that high. So this is our range high and our range low based on our last month perspective. So where did price actually go? If you notice, price came all the way here to take out liquidity. At this level here, we had liquidity slipping at this level here. Price came there, collect liquidity, and where is price heading to right now? You can see price is heading to this range low, which is our last month range low. And when you look at this last month technically, you see we had the break of structure. When you look at this area here, we see we had a break of structure at this level, telling us price is still pushing to the downside. Price is still giving us more lower lows and lower highs. So quickly we put our break of structure, our BOS, our break of structure. Okay, so as you can see, we are still looking price pushing more to the downside. So we have more sales opportunities in our DXY. So let us go straight to what is happening. So this is our weekly time frame. Price came, collected liquidity all the way at this high. At this high here, price came to this high, collected liquidity at this high. As you can see, price pushed back all the way within the range. So now you want to understand what happened last week and what happened this week. So what actually happened last week? If you look last week we had this that was our range high last week. So when you mark out our range high of last week and yeah, this is our range high of last week, and you mark our range low of last week, you understand that when the market opened, price took out the range low before heading to the range high. So when you mark out this high and this low, basically on your lower time frame, you're expecting to see a candle. You're expecting on your lower time frame to see something like this: price push up, going out to the upside to take out the range high. And when price took out this range high, what happened? Price came back down to this range low, because you can see where the open price is slipping. So this was actually what happened in our last week time frame. You can see, so you can see the market pushing up to the upside, collecting the external range liquidities, and price is closing back all the way down. So after looking at this price action, you can then go to your weekly time frame or your daily time frame, sorry, to see what happened during the 5 trading days. So I will leave our sketch, because our sketch is going to give us maybe an idea of maybe if what we are doing is correct or wrong. So this is our sketch. I'll just start by just giving out our sketch for us to understand how the market moves. So on the daily time frame, you get to understand that the market was ranging, had a ranging market the whole of last week. So last week was just ranging. Price wasn't actually giving us a direct move, but you can actually practically see price trying to buy. So when you look at this price action, you see after price took out the low, price was actually trying to buy all the way up here, and price sold back down. So that's what I'm actually trying to tell you, which is this our range that price tried to buy, took out the liquidity, and boom, price pushed back all the way to the range low, which is this low down here. So let us go now to our daily time frame. But now, before going to our daily time frame, what will you want to understand? You want to understand what happened. So after price took out liquidity from the higher time frame, you can see the news events that happened brought price all the way back to the range low. Now, what are you understanding from the market? You are understanding that the sellers are still in control of this market. So okay, so this is what happened. As you can see, there was a choppy movement that happened last week. You can see price actually giving us the higher highs, the higher lows, higher highs, higher high here, higher low here, higher high here, and boom, you see price pushing all the way to this low. And just understand, just one candlestick engulf the whole of that move. So this is actually what we're expecting, as you can see in our sketch. So I will take all of this out now, because we have understood where price was coming from and where price is going to. So now, what is your anticipation? You're anticipating now to see price going more to the down, pushing more to the downside because we are in a downtrend, and you can practically see our range low, which is this low all the way here, and here you can see this change. So I'll actually mark here as our change in the state of delivery, which is this area here, because you can see price break out that level and push to the downside. So now, what am I expecting as a trader? What I'm expecting as a trader is I'll be expecting price to come back 50% of this range. And when you mark out your Fibonacci from the range high to the range low, you get to understand that your 50% of this range is your breaker block. This area here, that is your breaker block. You can use this area now as your 50% retracement level. Yeah, that area there now becomes your 50% retracement level, that you are looking at price to come all the way into this retracement level and then sell now to the downside. So on probably Monday, yeah, Monday, when the market opens, you're expecting to see something like this: price coming back, giving you the change in the state of delivery, tapping into demand and pushing back all the way to the downside. So on DXY, we're expecting more downside in our DXY. We're expecting more sales in DXY, as you can see basically. So I'm gonna end at the 4 hours time frame. Remember, it's just our market focusing. So from our DXY, our next pair we'll be going to is our EU. So our EU, I'll start by taking out everything. So we understand where price was coming from and where price is going to, and why are we looking for more buy opportunities in our EU. So we go straight to our monthly time frame, go straight to the monthly. So as you can see, this is our monthly time frame. As you can see, this is our monthly time frame. We had this break of structure, and at that break of structure, you can basically see here that this is our key level. Looking at this area here, it's our key level. That is our key level at that area there. So what the price do? Price sold all the way down, took out that key level and buy to the upside. So basically, you can see that our last week low, last month low and last month high, which is our next draw on liquidity. So this is the kind of range theory, and it's very important to understand what the range high and the range low is telling you. So I will not actually mark our range. I will not actually mark our overall range like as I did in our DXY, but I will just focus based on what we are actually looking at, the range we are looking at price, look at our buys or sales opportunity. So as you can see, this was our key level here at this level here, and you can see we had this break of structure, price bought, but you can see the momentum was actually not the best. So price pushed all the way to the downside, collected liquidity, and you can see price trying to buy all the way to this range look to this range high that we have up here. So what am I looking at as a trader? What I'm actually trying to look at as a trader is I'm actually trying to mark out what happened last week, which is this low. This is my last week range low. Yeah, my last week range low, and I mark in my last week range high. Okay, so that's my last week range low and my range high. I go straight to the daily time frame. So in this daily time frame, you can see it's similar thing. Sorry, it's still a similar thing that happened in our DXY. You see, price pushing to the downside, all the way from here, trying to give us lower lows, lower highs, lower lows, lower highs, lower lows, and after taking out the low, price just gave us a big push all the way to the high. So it's the same thing that happened to our DXY. So if you come straight to our, maybe let's say, yeah, come straight to our time frame, you actually see the same movement. You see the same movement, price taking out the range high, lower, lower low, lower highs, lower low, lower highs, lower low, and the news even giving us a spike to the upside as anticipated on our sketch. So that's what happened. You see price came back all the way, taking out this key level, and now you can, in your 4 hours time frame, you can actually look at your key level in a bright way. So we mark out the key level. So this is where price was coming from all the way from this low. This is our key level. As you can see, we mark it out. So immediately price tap in, we saw the big move all the way to our range high. And now looking at price at this range high, you as a trade, what you're supposed to be expecting to do is mark out your 50% retracement level, because you have seen a change in the state of delivery. So price is now giving us more buy opportunities. So basically on the Friday before the news, I was looking at price to make a pullback all the way to this fair value gap for me to take a sell, or this other block. I was looking at price all the way at this level. So if price had given me a push maybe like this, if price has given me a push like this, I'll be looking to take my sell all the way here. But you can see the news event came in and took out price all the way to our range high. So buyers are in fully in control of the market. And now you need to mark out your 50%, which is taking from your range high to your range low. Where is your 50% sleeping? You can see your 50% sleeping all the way at this area here. So mark out your 50%, which is this candle. Mark out your 50%. And now what are you expected to do? All what you're expected to do is you're expected to just wait at price at your 50% retracement level, and you take your buy opportunities. Take your buy opportunities, targeting the next draw on liquidity. The same thing goes to our GBP USD. The same thing. So GBP USD is just the same scenario. As you can see, I've already done my analysis, the same scenario, the same setup. So this week is going to actually be a profitable week, because after the news event, the market has given us clear direction on where the market is coming from and where the market is actually going to. So we have a lot of clear directions now in the market. So this week is going to be a profitable week. So you just need to apply the same concepts over and over and over. And you see, even gold, this is my analysis on gold. You can see this is gold. The same setup, the same strategy, the same analysis. So you just need to stick to one setup, one strategy, and make sure you always make use of your candle range theory. Make sure you mark your candle range low and your candle range high. Always make sure your candle range theory is always intact, because marking out your weekly highs, weekly lows, daily highs, daily lows, monthly highs, monthly lows, it's actually gonna improve your way in trading, because you're actually gonna see what happened last month and what is happening this month. So with all of those things, you're actually going to understand where the market is coming from and where is the market heading to. So as a trader, that is your job. You need to understand what the monthly time frame is telling you, what the weekly time frame is telling you, and what the daily time frame is telling you. Of course, you want to wait for price to tap into your breaker block before you're looking at maybe switching to your 15-minute time frame for confirmational entry. So guys, that's our market focusing. I just needed to analyze two pairs so you understand, because I've already done my analysis. I'm just waiting for the week to open. So I just wanted to share on how I approach my market, how I view the market, how I look at the market in the beginning of a new week. So this will be the end of our market focusing. So do well to like, subscribe, and share. Motivate your boy with amazing comments, so I'll be able to show up every week and give you guys amazing setups like this on how I view my market. And of course, if in case you need private mentorship or whatsoever, I don't do signals. Sorry, I don't do signals. I do just mentorship. If you want to learn, I offer mentorship. I'm gonna drop my contact below the on the bio or below.